We've had a crazy run on the S&P 500 sitting at all-time high, and a lot of people tend to believe that just because the S&P is going up, or because any stock is going up, or because everyone is bullish, that means we have to have a stock market crash. This has been the sentiment over the last, I say, 6 to 8 months. And as you know from my videos, I've had the opposite view, and I just been pretty much bullish on the S&P 500, and I am still somewhat bullish on the S&P 500. I'm going to share a lot of charts with you that are going to blow your mind and make you think about a lot of things you maybe have not thought of before. And this is my whole strategy whenever I do these things, is if everyone is bullish, it doesn't mean the stock is going to crash. Or if the stock goes up, it doesn't mean it's overvalued. Maybe a stock goes from $10 to $20, but EPS goes up 200%. In this case, the stock is cheaper at 20 than it was at 10. And it's very hard for most investors to comprehend, because stock prices and charts tend to control what we think more than the actual fundamentals. Now, the first chart that's going to blow your mind is, yes, over the last 5 years, the S&P is up a lot, over 87% over the last 5 years. This is an amazing return. But if you look at the S&P 500 in real terms, adjusted to inflation, we haven't even made an all-time high. We're still flat for the last 3 years. We're still at the same price we were trading at in 2021. I know it's very hard to comprehend. You could go on macrotrends.com. This is where I got this chart. And they adjust the S&P to inflation, and you get the real S&P 500, the real return. And the truth is, we're still at the same price we were at in 2021. I mean, this chart blew my mind. I was just thinking about it so much. I'm like, this is absolutely crazy. So we haven't even made a new all-time high yet, which make you think that, again, we could go a little bit higher before we go lower. Even in real terms, we're still flat, still at the same price. Now, the second thing I'm going to show you, this I think it's also going to somewhat blow your mind, and this is a study that shows that normally whenever we have a massive bubble and we have a crash, the stock market tends to go up 100% after this event. Many times. This is, for example, what happened in the dot-com bubble. We had the burst in the dot-com bubble. The S&P went up. It did not go up 100% this time. But then we crashed in 2009. After 2009, we crashed a lot below this line. And then we went up by 2012. Over the last 3 years, rolling returns, we went up 100%. Then we crashed in March 2020. Then by December of 2021, like you could see, it's just almost reached the peak. It went up another 100% on the S&P 500. And then we had the crash in 2022, and we have not gone up 100% to get close to this line. Now, we don't have to go up 100%, but many times it has happened after we had a massive crash, like what happened in 2020. It happened in 2008. It almost happened in 1999. We did not go up the full 100%. We went up 60%, but still, this is a pretty amazing chart that would show you most of the time, once we have a major crash on the S&P 500, the next 3 years, the S&P 500 tends to go up 100%. Pretty amazing chart. Now, something else, and this is, I believe, one of the most popular charts on YouTube, not this one, but it's mainly this one, that shows the Magnificent 7, or in this case, with your daily research, they have the Mega Cap 8, which is basically the Magnificent 7 adding Netflix to the Magnificent 7, which makes it the Magnificent 8 or Mega 8. Now, if you look at this chart of the Mega 8 as a percentage of the S&P, it's over 28%, sitting pretty close to an all-time high, and this is a very high concentration within the S&P 500, which would again cause a lot of people to believe that this is all over 1999, dot-com bubble, all these things, just because these stocks make such a huge percentage of the S&P. And these stocks have been doing amazingly well. Google, Amazon, Nvidia, Tesla, not Tesla lately, but most of the stocks have been doing very well. And that means that we're in a bubble and we're going to have a stock market crash because these stocks are overvalued. Well, another chart, if you look at the forward PE ratio of the Mega Cap 8 or the Magnificent 8, Magnificent 7 adding Netflix, it's not as high as you might believe. It's sitting around 28 times forward earnings. Now, 28 times forward earnings might sound high, but if you look at it on a historical basis, it's the same multiple we had in 2019. And now we likely have higher, earnings growth for a lot of these companies, especially Nvidia. Nvidia has been doing amazingly well. Apple was not the best. Amazon is starting to do better on free cash flow. So a lot of these companies companies have better fundamentals, they have pretty good margins, and the PE ratio, the forward PE ratio is sitting at 28 times, which still might be somewhat elevated, but it's not as high as you might believe. If you look at this chart and you see all the sentiment, you would say, oh, maybe the forward PE ratio is 50 or 55. It's nowhere close to that. The highest it was around 39, and now we're sitting at 28, which we could go higher on the forward PE before we go lower, which means the Nasdaq or the mega cap 8 could still go much, much higher before they go lower. And my whole point is that yes, we might be forming somewhat of a bubble, but I don't think we're anywhere close to some kind of a major, what happened like in 1999 or 2000. We're nowhere close to that in terms of valuations on the S&P 500. Maybe price action is just making you believe that we are there or we are having massive, massive bubble. But you have to know that we were flat. I mean, if you look at the chart of the S&P 500 over the last 5 years, and you look at it from 2022, from late 2021 actually, so from late 2021 to early January of 2024, we were flat on the S&P 500. So we were flat for the last pretty close to around 3 years on the S&P 500, and in real terms, adjusted to inflation, we are nowhere close to all-time high in real terms. So you have to know that this rally is somewhat sustainable after we had, or justified after we had such a massive down move or a massive flat period on the S&P 500, and this could continue, which is why I believe stock picking is going to be key over the next few years, and I'm more of a stock picker than an index investor, but even the index should do very, very well over time. But again, this is what I'm trying to say, is that yes, price action has been massive, but if you look at the period, we were flat between December 23 to January of 2024. Absolutely crazy. So a lot of it is justified in my opinion. Now, if you look at the forward P of the S&P 500, it's starting to get elevated. Now we're pretty close to 20 times in terms of forward P ratio. Now 20 times is high, but it's nowhere close to where we were in the dot-com bubble, pretty close to 25 or 26 times. So this is another chart that would show you, yes, we're a little bit high, we're a little bit elevated, but we're still nowhere close to crazy levels or dot-com levels or anything like that. And especially when you have profit margins sitting pretty close to, not at all-time high, but pretty close to all-time high at 12.8%. And a lot of these companies have been, laying off a lot of people, which is normally not a good thing, but it's been improving their margins, their profit margins, and operating margins, and everything has been improving, and things are much better than you believe. Now, in terms of the S&P 500's earnings or revenue growth expectations for earnings for 2024, it's expected to grow 9.5%. Some analysts, they have 11%. For 2025, it's 13.9%. Now, this is the only way I could see the S&P 500 crashing, is if these estimates are nowhere close to come true. So maybe instead of growing 9.5%, we grow 4 or 5% in 2024. Then the stock market's going to adjust. In 2025, instead of growing 14%, which I'm not sure how it's going to happen. Maybe if we have rate cuts by 2025, they're expecting 14%. Now, if we don't grow 14% or 9.5%, I think the stock market will go down, a lot potentially. And this is the most likely scenario. But normally what happens in the market is you have a lot of stocks that rally, kind of like Nvidia. Nvidia started rallying. A lot of the stocks I own started rallying out of nowhere. And people get confused. Why are these stocks rallying? There's no reason they should be rallying. Then the company comes up with earnings with a massive, massive beat. And there were investors trying to get ahead of earnings, trying to expect good earnings. So the companies, they rally in good earnings comes up, they rally even more because they expect the next earnings report to be good. So a lot of times the S&P 500 is a leading indicator for these earnings. And maybe we're going up on the S&P because the market is still expecting amazing earnings from these companies. And this is what happened since 2023, if you remember. We were going up, people were bearish on earnings and all these kind of things. And it's just, they were amazing. Earnings were very, very well in 2023. And so far in Q4, they were not the best, but we'll see what happens in 2024. And normally price actions, a lot of the time, leads these kind of, things. Now, in terms of basic technicals on the S&P 500, I'm seeing, a pullback due very, very soon. And this is just the RSI index, relative strength index. Most of you are familiar with this index. And you could see this line. Every time we went above this line, something very bad happened. We went above this line in 2018. And this is when, you know, we were buying Apple for 13 and 14 times earnings. It will never happen again. But after this period, we had a very quick dip of 11.8%. It was an amazing buying opportunity, trust me. In March 2020, this is what happened in January. We were pretty much overbought on the S&P 500. After that, we had a 34% crash. We somewhat touched this line, almost touched it in August of 2021. After that, we had a 5.8% pullback. We did touch it over here a little bit, and we had a 3% pullback in 2017. And now we are above this line again, and we could go above it much more before we go below it, which is why I don't believe this is a signal to be short the S&P, and you could lose a lot of money buying puts trying to, just because it's overbought, because it could get even more overbought, and the good sentiment gets even more sentiment, and we could go to crazy levels before we go lower. But I see a pullback that's pretty much imminent, maybe 3, 5, 6%, I don't know. But for me, I know what I'm doing in my own group. I have a lot of stocks that are more of a shorter term investments that I'm up a lot on, turnaround plays like the Geo group and many others. I could sell them and then, you know, get some cash and buy my long-term investments on the dip. So I have these kind of things I'm working on. I'm not really worried about a crash. I'm pretty satisfied that I hope we get it so I could buy a little bit more on a pullback. But I don't think it's going to be a huge crash. I think it will most likely be a pullback maybe to 45, 4,600, and then we continue going up again on the S&P 500. This is the best indicator that I shared, and I think it's the only one we can trust because it's been accurate pretty close to 100% of the time. And this is the 10-year minus the 3 months. Every time it goes negative and it reinverts into positive, you could look at the shaded gray area, we have a recession and we have a stock market crash. It happened in 2000. As soon as we went positive, we entered the recession and we had the crash in 2001. Same thing happened in 2007. We went up, we started having the recession. A few months later, we had the 2008 financial crisis and stock market crash. Same thing happened before COVID. Yes, maybe COVID was an outlier, but it did go down in 2019, which was showing that the economy was in a very bad shape. We were in a manufacturing recession. After a few months, we had COVID, which might have been the catalyst. We entered the recession, we crashed on the stock market, and now we're negative again, but we're nowhere close to inverting into positive, which is why I said many times in my videos, I believe most of the pullbacks we're going to have in the S&P in 2024 will most likely be short-term pullbacks, nothing crazy, no 20, 30, 40% crash. And if I had to bet, I would say it would happen mostly in 2025 once we reinvert into positive on the S&P 500. Now, you might ask, why do I do all these videos? Why do I waste my time? Why don't I just pick companies and move on? This is what I mainly do. But I like to know where we are in the cycle, where we are in the stock market, to try to somewhat have some kind of a cash position. I don't sell to prepare for a crash, but I try to have some kind of strategies. I'm like, all right, if we go down here, I can sell this stock, buy this stock, do this, do that. So I like to be in a good shape, so to not be surprised if something bad happens. And I would not be surprised if we have a correction 3, 5, 6%. And I will be ready and I will be very happy to dollar cost average down on my long-term investments. And this was not financial advice. It was just my opinion on the S&P 500. I hope you enjoyed the video. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.